Yo, what's up? 你好吗? Yeah, boy! Welcome to Forex.Today. All right. Let's get this party started. Okay, welcome to Forex.Today, the YouTube community of almost 20,000 foreign exchange traders. We gather here today for technical and fundamental analysis with the overriding goal of putting together trade plans. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Once again, my name is Wayne McDonald. I'm a currency trader, and I have been for about, you can say 20 years. I've been following the market dedicatedly. Before that, I was a venture capitalist. Before that, I was a high-tech entrepreneur in the Silicon Valley. Before that, I worked in a nonprofit organization with George Soros and a whole bunch of other interesting, powerful people. Oh, and I worked at this thing called the space company, NASA. A little kid actually just asked me the other day, he's like, you know, when submarines do this and then spaceships do that, like, how is it that they don't do this and that and the other thing? I'm like, oh, well, they put air between two layers. And he's like, how do you know that? I'm like, I used to work for the space company. He's like, really? I'm like, sure shit, kid, sure shit. Anyways, hey, ask questions, get involved. I'll do my best to help and share with all the things I've learned, good and bad, about the game we call Forex. In my 40s, I went back to school, got a Harvard degree in economics. Cool. So I can share some of that. So you can ask me about that. I've passed the Series 3. You can ask me about that. There's a lot. So I'm willing to share in this, I don't know, hour and a half of our time together. But if you don't ask questions, I don't know. Like, think of it this way. You're kind of the boss. I am the servant. You can guide the direction of our conversation here today. I'm not really here to throw you into trades and think for you. Instead, I'm going to treat you like an adult. I'm going to treat you with respect. We can talk about the issues at hand that matter. Man, I got to drink some water, huh? So anyways, thank you for being here. If you need, if you got a problem, I'll solve it. Well, I don't know. But anyways, in the description below this video, you will have links to, for example, tradersway.com, which is the broker I recommend for you because they have earned my loyalty and respect. There's a link to my book on Amazon.com. I wrote it, I don't know, 15 years ago, 12 years ago. I don't know what it was. But it still is pertinent. If you notice my trading style from 2005 to now, you'll notice that it hasn't changed, which is pretty amazing, actually. So I have no new cool trading strategy of the week. I do the exact same thing that I've done for, almost 20 years. So that information is in the book if you prefer reading as your modality for learning. If you prefer videos, there's a link in the description below to free content on the FX Bootcamp YouTube channel. There's paid content at fxbootcamp.com. And by the way, 65 hours of training videos, all beautifully organized and everything, for $88. By the way, I'm going to raise the price. I think it's stupid now. you've had enough opportunity to take that offer. So I thought about it yesterday. I'm like, yeah, it's stupid. I'm going to jack up the price. So whatever, last chance. I don't know when I find time, I'm going to raise the price. So hurry up. What else is in the description below? Oh, my chart templates. The link is in the description below. So yeah. So lots of interesting things going on, right? Master Trader says copper is soaring. All right, cool. So buy the Chilean peso. Okay. Awesome. So once again, I recommend using tradersway.com. They're a boutique foreign exchange trading firm that has business ethics and morals, as well as providing a quality service. But even if you think about it, because they're boutique, they don't have 10 or 20,000 foreign exchange traders all trading on the one same server. You imagine how slow it is latency-wise to have that many people on one server? Hey, it's profitable for the broker, but think of it. So wouldn't you rather have a boutique foreign exchange firm where there's less people on the server so your execution speed is fast? Like, just think of it. You're like, yeah, that totally makes sense. And I did test them using a third-party software. No, it was probably 5 or 6 years ago I did it, but they were not the fastest. Hey, I'm just being honest. But they were very, very fast. And then these big brokers, some of which have now gone out of business for other reasons, like maybe trading against their clients, but they were actually quite slow. They were very slow. So, Trader's Way is one of the fastest. I have no problem saying that. Okay. So that's just one sort of insider tip, if you will, of how to choose a broker. Don't listen to ads and don't go to the cheapest is my advice. Okay. Go for quality and value and ethics. Codename says, hey, how do you rate academic knowledge versus real world based on my education? Well, and most people don't get a Harvard education when they're 40 something, right? So I can look at it like, I was successful very early in life. Okay. So I had to hustle. I was brought up in a world of hardworking, quiet, hardworking, honorable farmers. Okay, there's no glory in farming. You're not going to receive an award. You're right. No Nobel Peace Prizes go out to farmers. You just wake up really early and you go to bed really late. And in the middle is lots and lots and lots of hard work. So that's kind of where I come up from. So, but I'm an entrepreneur, so I take that work ethic and I turn it into hustle. And my whole entire life, I was doing more than I possibly was capable of. Which means you figure it out and you make it work. So I think that tenacity, if you want to call it that, is key. If you're a highly educated, child of a Russian oligarch, doesn't make you talented, doesn't make you smart, doesn't make you successful, just makes you rich and educated, right? So I think you actually need both. But then the limitation for a lot of people is they got the hustle, but they lack the knowledge and they're playing the wrong game or they're playing the game wrong. Okay? So really, honestly, Codename Rin, you got to have both. You got to have street smarts and hustle, right? So we call that, it's a level of intelligence, right? You have to have a level of natural intelligence. But on top of that, I'm telling you, education truly matters. Truly. Okay? Truly matters. Okay? But you have to have common sense and hustle as well. Okay? So I know like Elon Musk says things like he doesn't necessarily look at your college degree, and he says, I never went to Harvard, but people that work for me do. Okay, I get that. But ask Elon Musk if he hires dumb people. Okay, ask Elon Musk if he hires uneducated people. No. Think of the world really as competition. Think of it that way. Like, yes, I went back to school in my midlife to be an inspirational role model to my own children. But also, you could look at life as a competition. Why else would I go? Because most people can't. And if I have an opportunity, I'd be a fool not to take it. And it makes it more competitive. Do you think in the world of finance and investing, do you think if I talk to a client and I explain, it comes up in the conversation that I have a bachelor's degree in macroeconomics and a master's degree in financial management, both from Harvard, do you think it matters? Hell yeah, it matters. Holy crap, does it matter? So, you know what? I was able to get it, and that was just hustle. Am I smarter for it? In many ways, but not in ginormous ways. But I got swagger. Okay? So that's good. And my competition doesn't have that stuff. So it's good just from a competitive business standpoint, if you think about it that way. So get as much formal education as possible. Okay? Okay? Try. Try as hard as you can. That's my message. Try as hard as you can. All right. So let's take a look at where we is. Let's change this up. Let's start. Okay. Here. Something right in the world today, and I don't know what it is. Okay. So we're about halfway down to 109, which is the next level of technical support on a big level. Itorman Manuel says, do you think the Fed will raise rates? Look, I don't have opinions. I have conclusions, and I have from reading the facts. Let me answer it this way. Fact. Okay? Jay Powell, the head of the Federal Reserve Bank of the United States, chair of the Board of Governors, and chair of the Federal Open Market Committee, the person that sets interest rates, said under congressional testimony yesterday they will raise interest rates by 25 basis points. Okay, and Torment, the fact that you asked that means you're not in the game. So you can take that as me putting you down and I'm being mean, or it's a wake-up call. You shouldn't have asked that question. Okay? You told me that you're not paying attention to fundamental information that directly changes the value of the currency. The stock market rallied 600 points yesterday based on this information. Okay? So put it on your radar is what I'm trying to tell you. Like, you need to get in the game. Okay? Okay, it's not even a question anymore. Okay? Yeah, that's it. Like Richard says, you got to pay attention, but he's not saying it to you, I don't think, but the idea is like, you got to elevate your game. You need to be more competitive. You need to have these answered already, right? So today is day 2 of this testimony, and you might want to pay attention to that. Okay, he'll probably say the same thing from a different point of view this time, different angle, but he can make a mistake today and bring the stock market back down, or he could really rally it back up again. Usually the second day is benign because he just repeats what he said yesterday, and we already know, we already priced it in, we already made the move. But paying attention to the fundamentals will explain why things are happening. Okay, so you're asking what will happen next? Oh, it already happened. We already made that play yesterday. Okay, cool. So again, I'm not putting you down. I'm trying to lift you up. Cool. So we take a look at, okay, what's happening here. It seems like we have a lower low. You need to mark these out. Okay, you can already see we had the retest roll reversal trade. Okay, and we're making our way down. If I change the template a little bit, let's go from yearly to monthly now. Well, actually, let me mark something. This is the, I guess I can't. So let me start here. Let me mark, this is the closest big pivot. Okay, so let me go back. Indicators, FX Bootcamp pivots, 1 year. Let's add 1 month. Okay, good. So let me zoom in here. And the projected target for the bottom of March is here. Okay. And then let's open up FX Bootcamp pivot again. This is just a technique. You don't have to do it this way, but it's just technique. Okay. Close. And then you can see that this is the conservative target. The lower one is the aggressive target, which is also a monthly. And then this is an annual, and this is a monthly. So let's assume then we're going down further to the lower level because there's more targets down there. And let's just say this week's conservative target is too conservative. Boom. I made a judgment call. A Torment, join FX Bootcamp. It's $88 a year. Okay. That's it. You got it. I mean, dude. Okay. Again, if you compare it to college, so, you know, one class at Harvard cost me thousands and thousands and thousands and thousands of dollars, right? So you sign up for the class and then they're like, go buy these books, and you could drop $400 or $500 in books on one class. And keep in mind, every single semester I took more than one class because I was a full-time Harvard student. So just think about it, you know, I probably have $7,000 in textbooks, right? So $88 a year, like, oh my God, dude. But I am going to raise it. I think it's, I think I made a mistake. It's stupid cheap, too stupid. So, all right. Down to down is the idea. Okay, you see, do you think that's a reasonable target? On this time frame, on a daily time frame, it's also one standard deviation from the mean. Not that it will go up, but that's in the past. Okay. Okay, remember y is equal to mx plus b. Okay, m is the slope, b is the intercept, x is the x-axis, y is the y-axis. Okay, so you're building a grid. Okay, and what we're looking at now is m is equal to the rise over the run. Okay, and it's very negative. Now, the next part is standard deviation, and so you figure out the mean and the slope of the mean, and then how far price goes above or below before it reverts back to the mean. Okay? And we're at that, this target here is based now on support and resistance of previous markets. That's market support. And it says, especially if we hit that early in March, that we will revert back to a mean, a different mean though, a different measurement of average. This is the slope of the mean over time. And this would be returned to the mean of the previous market. Okay? But nonetheless, what this is saying is if we are here and the mean is here, the distance, okay, the deviation from that is such that in the past, when we were that price had deviated that far, it tended to revert back. So now you have two things that say mean reversion. We call this one counter trend, however. But all we're really doing is saying, okay, price will fall, and then once it gets to about here, between 109 and 108, it'll be oversold. Bears will take profit, and bulls might get back in. Yeah, King's right. I lowered the price of FX Bootcamp at the beginning of COVID, and I increased the value people got by 500% by working with people every single day, because I knew their lives, their family, and their household wealth was at extreme risk. Okay? And I helped people buy the stock market at the bottom to get back in. It was one thing. So I lowered price something like 90%, and I increased the value, how much time I spent with people, by 500%. That was my contribution to society when society was in need. Okay, Jay Powell's removing stimulus. I think I need to do the same. If you don't sign up for $88, then there's no need, because you're not going to help yourself anyways, so might as well put it back up to a regular value. Everyone has an opportunity, but it's not forever. Right? You got to lose yourself in the music. The moment you own it, you better never let it go. You only got one shot. Do not miss your chance to go, because opportunity comes once in a lifetime. Yo! Listen to Eminem. Or was that Confucius? I get them mixed up. All right, so let's move on.com. Huh? I know what you're thinking, Mom Spaghetti. All right, let's take a look at here. Ciao. Okay. We printed a top, printed a top, printed a top, printed a top. So I'm wondering if this will end up being a role reversal here. So the play that's here is it made the lower low, maybe a lower high. How do you predict the lower high? You look left, 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 and you're like, Okay? So you have lower low, and then this is a guess on lower high, which would predict a new lower low. What do you think? Smell like a plan? Just FYI, I'm short at the central pivot. Oh my God, Bucky. Abdullah says it's cheap for USA people. Yeah, but I think what you're saying is in some countries and some currencies, $88 is still expensive. Yeah, well, I can't fix that, so I might as well put the price up. Right? Yeah, well, that's what we do every day, Santiago. Okay, I do that every single day, but we can pick a currency, or actually maybe we'll move over here. What do I have here? Okay. So it depends on your time frame and analysis, right? So, for example, one technique that I've taught over and over and over again in recent day trading groups is you mark the high or the low, you mark the high, and you have a little breakout. Okay? It's just a scalp. It's not that important, but that's one way to kind of get in the game. You notice we hit longer term support. This is actually an old, okay, the reason it's here and here, this is an old market open for the New York session. And I put horizontal lines to mark it just like I did like here. Okay, I use the horizontal lines, and anyway, so you can see we go back into old support and it held. Then you can see back here, it went back to the old top. So the top, right? Top in here and then coming around here. So you can kind of do the same now where you got a printed bottom, you got a printed top, and you look for a breakout. That's one way of trading it. Now, I like to filter things through a bias, right? So if I was bullish on this, and I actually am, okay, I would look for buying dips and looking for congruence of roll reversals. So that wouldn't be an entry, but this would be the entry. So I'm filtering it more than a breakout, okay? It came down into support and then did a 1, 2, 3. And I would have already been bullish. So I don't look at it like sort of a London breakout strategy. I try to backfill into my fundamental bias, right? It tested it again, tested again. Here's a new market open. And of course, what I'm anticipating is, let's say for today, up. Okay, that's what I'm anticipating. Why do I anticipate that? Because I'm a bull. So let's drill further in. If that's my general operating procedure, or right, then what I want to do is I can buy low on the market open and I can buy high on the market open. If I create, we call this trapping. So you have this as a potential, or you have this as a potential. Okay, and of course you have really kind of a third. It can come down and pop back up. But what I would do is I'd let it drop. I'd let it pop back up here, catch a little pullback, and then re-engage the same plan A. Okay. So that's something that we've been discussing on and off the last several days in the day trading group, for example. Okay, that's just one entry technique. It's not right. Okay. Yeah, Alistair paid $900 for what's being sold for $90. Yeah, so I gotta lift it up, right, Alistair? So has my bias changed? No. Okay. Okay. I'm building positions is the idea. Okay. So like, let's say there was 15 weeks of which I have low conviction for the first 3 and high conviction for the next 12. But I don't know what's going to happen any of the 15 weeks. But what if on Kiwi dollar once, right? 1 trade per week. Okay. What if I was able to buy Kiwi dollar once a week? Okay. And never take profit. My only drop stops, move it to break even. Week 2, I get another trade. Drop a stop at the open of the trade. 2, 3, 4 days later, I move my stop to break even. Next week, grab another trade. How many trades could I potentially have open? Now you'll say, oh, well, all 15. Well, let's just say 1/3 of them get knocked out at break even. But at the end of 15 weeks, I still have 10 trades open. Do you think I would have done all right? Hey, average 100 pips per trade, that's 1,000 pips. Multiply that by multiple pairs. Yeah, I'm going for the long game, the big game. Okay? The cool thing is I'll have, let's say, 10 trades still open and all the stops at break even, and they had been at break even since I made the trades, basically, right? So I'll have no risk. I'll have risk-free and unlimited upside opportunity. My only question is when do I take profit on the whole dang thing? Matrix, you might be doing it at the wrong time of year. That's all. You have to understand the seasonal flow. So then over the next 15 weeks, okay, I'm looking at a different market behavior. Okay, but you're right. It's not easy. I'm not trying to purport that that's easy, but I am trying to get people to think ahead. Alistair says, why do people want things for free? Give me a signal. Yeah, my signal that I give people is that they should quit trading Forex. Okay. I'm like, oh, here's a signal. Quit. I asked Lucas, who farms. I asked Lucas the other day, I'm like, hey, man, do you know any lazy farmers? I want sorghum that grows itself. Yeah. Yeah. Anyways, right? Like, do you know any lazy restaurant owners? Right? Do you know any lazy emergency room doctors? Okay. Well, right. So code name is like, what if it drops? You're in long-term positions. What if it drops? Well, there is a technique for managing your stops by actually you can move your stops, trail your stops along the way. But also, I'm telling you, to know seasonality is unbelievably critical. Most people in FX Bootcamp know every year when I take my family to the beach. Do you know why? Because I have a timeshare at the Marriott? No, but it's funny. Well, they're like, well, if you don't go, like, what is it, week 27, I always go on vacation. Well, he owns a timeshare. No, I don't know what week it is, but I go after, okay, the Friday after the Fed meeting. Why? There's a particular Fed meeting that is a pivot point, a turning point in the market. Not that it goes from down to up or down. It's different every year for various reasons, but a change in volume and volatility. Vol and vol. So what I do is, right? And I've done this too, by the way, where I say goodbye on Friday to everyone. All right, have a nice weekend. The next day, it's Monday, and I'm like, hey, I'm live from the beach, and I'm still doing my, right? One year I was on the beach, got my coffee, the sun's rising, the birds are singing, you can hear the waves breaking, I'm smoking a cigar, and I'm like, hey, man, I'm on vacay. And of course, boom. Volume and volatility dropped because I left the market, right? The rally ended and it just sort of fizzled and faded for 2 or 3 weeks, right? But there's, all I'm saying is there's a logical pattern of life, humanity, business, all that kind of stuff. And that you can put that in there. Okay. Matrix has a 10-acre farm in Louisiana. Okay, interesting. And you are, okay, right? Yeah, okay, cool. Yeah, exactly, right? Good luck if you can't do the work. Like, okay. So anyways, it's not, so for those that are trying to learn to hold trades longer and stuff, especially we've just gone through a period of higher volatility than usual, which is a trend breaker. Volatility is a trend breaker. So we've, you know, the fourth quarter was a biatch. We started beautifully and then it all crashed on Omicron, and then we've had to deal with all kinds of things. You know, COVID's gone, COVID's back, COVID's gone, COVID's back, you know, all that kind of stuff. And now we got this issue in Russia. I get you, man. But you got to look at the bigger picture though, too. And, you know, the unusual market forces will not be here forever. And the usual will return, because it's not a sentiment idea. It's not a headline idea. It's normal human behavior that creates these patterns. So that will return. It's just hard to see if all you're doing is looking at, let's say, the last 12 weeks, and you're judging based on the last 12 weeks, and you're projecting that forward for the next 12 years. And I'm like, no. The last 12 weeks were unusual, but we are returning closer and closer to the new normal patterns. And a lot of these patterns that we're playing actually are very, very normal patterns. And it shows me that everything is right as rain, or at least getting closer to that. Okay? So once you learn the bigger picture, the bigger pattern beyond just basic technical analysis, because now it's not even fundamental. We're talking about business cycles. We're talking about manufacturing cycles. We're talking about monetary policies and divergence in monetary policies around the world, right? We're talking about geopolitical risk that we have right now, this idea of risk on and risk off for every little headline, okay? But everybody knows here the stock market fell hard in January. But I have said probably 100 times the stock market was going to fall hard in January, 10 to 20%. And I had been saving money. I kept telling stock market's going up, and I'm like, I'm saving money for the drop. I'm saving money for the drop. It's going to drop in the first week of January. I've been saving. I'm going to buy the dip. Boom, drop 15, 20%. Boom, I bought the dip. I've been buying stuff. And I have high conviction the stock market's going to be up the next 90 days. Okay? There might still be some up and down the next couple of weeks, but let's say it's going up. I have a high conviction for that, and I'm putting money to work on that. A lot of people, what they do is they look at the stock market and they see down. Everything's down. The market's down 15%. But your Facebook is down 50%, your Netflix is down 50%, your Peloton is down 75%. You're like, it's the end of the world, it's the end of the world, and all the Russians and all this and all that and the sanctions, oh, it's nothing but bad. Well, do what you got to do, but I'm buying everything I possibly can. Because I'm not looking at now, and I'm not looking at the past, I'm looking at the future. I'm not making guesses, I'm not making assumptions, I'm not making opinions. I'm looking at economic data and research, and I'm making a conclusion, an investment thesis, and now I'm deploying capital. Every dollar being a little employee that's going to work 24 hours a day on my behalf. Okay? And so that's where I want you to get. That's all. I want you to, right? And if you have that, right? Okay? This idea that you are looking forward will help you, and factual, again, not best intentions and hopes. No, you have facts, and you're able to say, at this time of year, I'm going to make these number of trades on these pairs, and I'm instead of going for trading it for 2 hours, I'm going to trade it for 2 weeks or maybe 2 months. And you might get a better outcome if you get that correctly. Okay? You're not going for 25 pips, you're going for 250 pips. And you're not just in one trade a day. If you build up 10 trades over a period of time and each yields 250, now you got 2,500. And you're like, oh my God, because you could never do 2,500 pips going for 25 pips per day. Meaning you made 25 today, then you try again tomorrow for another 25. Well, even if you're 100% right, which is extremely doubtful, you're still not going to get there. Guy says, I guessed 100% correctly. Well, no, because March I'm actually neutral. I think we're still headline driven. But April, May, June, okay, this is what I'm talking about, the S&P 500 now, right? Now, yesterday, though, was a rally based on discovering that the Fed has already made a decision on how much they're raising interest rates. Did I know they were going to say that Jay Powell was going to say that yesterday under testimony? It's never been done in the history of the Federal Reserve Bank of America. So it would be fallacious for me to say, oh, I told you so. No, it was like an amazing shock. Just an amazing shock. Like, oh my God, because I think he actually screwed up. Because by telling us it's 25 basis points, he's indirectly saying the Federal Open Market Committee meeting on the 15th and 16th is bullshit. That they go into the meeting and they already know. And they just kind of do the meeting and they go through the charade and then they're like, okay, now let's everybody pretend we're having a discussion, but they've already decided. Well, then what's the FOMC meeting about? Why do they even wait? Like, why don't they just raise it now then if Jay Powell says in testimony, yeah, in 2 weeks we're going to raise interest rates by 25 basis points. Well, then just do it now. Well, the market reacted and priced it in like it's happened. Because it has happened. He just said it. So now, like an arbitrage, everything happens. Okay? So like an arbitrage, okay? Merger arbitrage. Company A announces it's going to buy Company B. Okay? Company B's stock is $50 a share. Well, for Company A to buy it, they have to offer a premium to say, hey, Company B shareholders, we'll pay you more than it's worth so that you can sell your stock to us. We'll make it worth your while. So Company A is going to offer a higher price. Now, what if there's a leak, a whisper, and the market finds out Company A is going to offer Company B $65 a share to take it over? You know what happens? Soon as the market hears 65, the price goes to 65. Like literally within 5 minutes of the news hitting the market, price will rise. Boom. So now if Company A wants to buy Company B, they have to offer a premium over 65. Or that Company A announces and then boom, it moves. Okay? And now, and that's an event-driven strategy, by the way. Oh, and, you know, my day trading group, and we've been on and off talking about doing a conference, and I've picked a hotel. We'll probably do it in Nashville, Tennessee. It's the center of the United States. It's cheap and stuff like that. And I wanted to do one not on trading, but on professional money management and capital raising for your Forex fund. And I thought the first opening presentation or really class should be focused on the entire hedge fund industry. And we can go strategy by strategy by strategy. Things like when a client asks you that, do you know anything about merger arbitrage? You can say, oh, I love all kinds of event-driven strategies like merger arbitrage. And you just know these things. You're like, how how other hedge funds are making money besides your Forex fund, right? So some will bet against this happening. So for example, company A might buy company B, but the government might come in and say that would create a monopoly, so they won't allow it to happen. Well, as soon as that happens, this drops back to 50, right? And so people can bet against it. So once the market finds out company B is going to be acquired for $65 a share, the actual price goes to $65 a share. And then other people come in, they're like, BS, that ain't going to happen. That ain't going to pass. So they start short selling it. Okay. And in many cases, if they're really on the game, they see it coming, they buy it at 50, it goes up to 65, and then they short sell it. And now they're even hedged a little bit, right? But anyways, those are event-driven strategies. So soon as Powell says we're going to raise by 25 basis points, okay? If you remember, 3 weeks ago I told you 50% of the market's wrong. Which 50%? I have no idea. LIBOR, it'd be at the second half of the year. But what I would do would be impossible to do online. This is not you sitting at a table listening to me talk. This would be you and another person walking and talking things out loud. This would be like us practicing your technique of explaining what you do. What do you do? I'm a Forex trader. Okay. What usually happens next is you bumble and mumble and babble, and it becomes very uninteresting to a potential investor. So I'd like to, practice these things. Let's just talk about what is it that you do. Oh, I run a foreign exchange hedge fund. Oh, that sounds interesting. Yeah, well, okay. So imagine we do all kinds of things, your elevator pitch all the way to your full presentation, being able to walk somebody through your track record and discuss things like risk-adjusted performance versus absolute returns, and then maybe sort of correlation and non-correlation to a benchmark. You'd have to be able to know all these things and say, well, this is a little bit different than other types of hedge funds. Because if you're talking to a sophisticated investor, they might be in some other hedge funds. So you can say, well, what other kind of investments are you making right now? What's in your portfolio? Are you an individual investor? Are you a family office? What are you kind of doing with your money these days? And they're like, well, we're in a couple of hedge funds. Oh, well, what kind of hedge funds? And you can talk about it, and you're like, oh, that's interesting. How are those returns, and what are the correlations you're finding there? And how do you think we would fit being an absolute, not an absolute return fund, but sort of are you looking to us as liquidity? Are you looking at us to hedge foreign exchange risk in other parts of your portfolio? And you're having these great conversations, right? Well, you got to be able to know all of this. But here's my other thought. Let's say 2/3 of the conference is a fairly expensive conference because we have to rent big rooms and we have to do, it's highly interactive and very high-end information. right? But then 1/3 would be very, very, very affordable as a conference. And one of the reasons why is it'd be sort of like a party with some training, right? But imagine now at the, let's say on one of the last days of the conference where more people join us. Imagine now I rent a place where we can have a cocktail party and we're mingling. We're mingling now. Okay. We're mingling and we're having a good time. And there's some music going on and we have a cocktail and you don't know anybody and you're in a weird environment and all that kind of stuff. And it's even a little bit hard to hear. Well, that's what a cocktail party is. But these guys that are in this part of the conference, they're now trained on how to do things like strike up a conversation with a potential investor and explain what you do without babbling. And so these guys are now practicing what they just learned. And I think it'd be fascinating for the other guys to go through this process. They're like, wow, they would learn from those that just learned, right? And I'm like, oh my God, this is fun. You see this? All of a sudden I'm like, this is fun. But can you do that over Zoom? No, son, no. Right? I think that would be epically cool. Okay. All right. So, all right, let's move on with it. So let's go here. I'm long Aussie dollar, as most of you know. I skipped this trade. Oh, let's do this. I skipped this trade because of the potential risk of the gap. Okay. Normally I would trade a gap, but we don't get gaps anymore. So by definition, gaps are not normal. But normally I would trade a gap. But they don't happen anymore, so it's not normal. What happened was something due to Russia. And I'm like, dude, when it's a geopolitical or event risk, not fundamentals, then really this could, right? So I'm just like, you know what? I'm risk averse. And I said, look, I know how to trade this, but I am probably more risk averse than most people, but I think that's a good thing. And I said, you know what? I said, on the long run, you're not going to really be penalized that much, like in losses, and like on the long run, it doesn't matter. So why would I need to take the risk? So I like to trade the normal, boring stuffs, right? So I bought it in, not there, but I bought it here. Cool. Great. Cool. And so that right? So now this is very interesting because so this one wasn't very profitable yet. This was profitable, and now we've held, and check this out. Okay, we're already kicking off tomorrow's trade. This is tomorrow's trade. So we're already done for the week is what I'm trying to explain to you. So for those that show up tomorrow on Friday and they're like, hey fellas, what are we doing today? Dude, that trade is tomorrow's trade. We're already done. It's done. Friday's done. I know we're just warming up on, Thursday morning, but dude, Friday's done. Friday's done. Traders are getting their trades on before the risk event of non-farm payrolls tomorrow. So it's going to go up and it's going to stop, and that's that. Ish kaput. Ya. Yeah, Maida's going to go to the cocktail party for sure. Yeah. It's going to be really cool. I know the exact spot where we're going to stand. Okay. All that kind of stuff. Mitchell says, that macro course you have on your site, is that part of the other course? What other course? You join FX Bootcamp and you get everything except the live trading groups. You get every single video. Okay. Yeah, brand new course, macroeconomics. Matrix is like, the month is already over too. Yeah. So we would, I don't have anything planned yet. It would be a big deal, but, it'd be sometime in the fall, but I honestly, I don't know if I could even pull it together. But you have to start with the idea, like, would anyone even go? Does anybody even care? So anyway, so look, $88, and it gives you everything. Yeah, everything. Day trading, fundamental analysis, price action, swing trading, trade planning, macroeconomics. Okay, this fundamental analysis is really monetary policies. Okay, central banking, basically. And by the way, this macroeconomics course is no joke. Like, it's no joke. It's not simple. Like, I just don't go over simple stuff. It's like, it's college level. But like I said, I don't do any of the calculus, but it's like legit. I'm telling you, it's legit. Okay? Anyway, so that's it. So we're in this mode now of buying dips. Okay? So day traders, for example, buy, didn't get an opportunity, buy, and it's already a front run. You see the role reversal front run? It's golden. Okay? Golden bull, not golden bear. Okay? Now the other side is I'm on this, as I've already explained, and as I previously showed you, like 20 minutes ago, the plan is that. Take it down. Okay? Take it down. I shut it down. I shut it down. Yeah, bring it down. Okay? Is that right, Church? Yeah, but that's probably the best way of doing it. Anyways. Yeah. Cool, man. Yeah, Richard, so going back to the Aussie and Richard's comment that it's worth probably 500 pips. Well, yeah, so that will be a decision that I need to make because I know it's hard to see this. I might stay in this until, I don't know, 80? Okay. So what'll need to happen, I know I got a lot of stuff on here, but I'm looking at that as a short-term top, big top, and then ultimately here, right? So I see all that, and I'm thinking the future. I'm not looking past. I'm not looking at anything else really. So I'm looking at this as a bottom. Okay, we breached support, resistance, which was part of my trade plan. Now we're here. Okay, and at some point, right, maybe we'll go about here, and then we have one of these, and I'm looking, for holding this for a while. And so inside of that, I probably want to add, right? So inside, these are daily or weekly candles. So imagine every week at least I add one trade, let's say. So, right? So there's, just imagine, I don't know, one here, one here, one here, one here, okay, one here, one here. And you're able to build a position. That's all. So I'm just trying to stay out of the volatility, if anything. Okay. So here we are. You can see I've already identified this. And we have this identified. And then we have this identified. So if you're a bear, you sell high. Okay. If you're a bull, your plan A is here. Your plan B is here, and that's not desirable. And your plan C is buy it here. So your most desirable scenario is plan A. Come on, let's do this in blue. There we go. Plan A and plan B are most desirable. And I'll call this C actually, have it go all the way back around. Yeah, you would do that too, but you're hoping not to. So right now you're not thinking that. You're thinking A and B. Okay. And what you'll notice is A is to B, but not B is to A. So you're like, I'd like to buy it here. It will make a higher high. Then it'll drop back on Monday. I'll buy it there. And we're taking this north. And where's the next level? The next level's there. And the next level's there. So we call that an MM3 and a R1, MR1. Cool. Because the pivot points are also looking left, doing the calculations. So you can eyeball it, but the math is working for you. So either way, you could just use the monthly pivots and it's telling you the same thing, but using the math. Okay, let's do gold, oil, and Bitcoin. Bitty, can't you see? Sometimes your trades just hypnotize me. So for those trading Bitcoin, I apologize, but I stopped your trade last night. In the day trading group, we marked this out. Okay. So we have a trap here for those that are bullish. Okay. So you can buy it here or you can buy it here. Okay. So okay. So if you prefer green, okay, green. That's right, Thiago. It's a good point. My model, my seasonal model, if you want to call it that, says be ready on the 3rd or 4th week of March. Because probably, I can't always explain exactly why. And every year it's slightly different, but usually the same. It's for right. So anyways, so if you back sort of fill it here, Thiago makes a good point. The turning point may revolve or probably revolves around that Fed meeting, but we just found out what happened. So the Fed meeting just happened yesterday. So if I'm expecting, let's say typically a 12-week rally, it just turned into a 15-week rally. So should I take my 25 pips profit or should I go for 1,000? Well, I have a time-based profit. So I do this a couple of times a year, by the way, and this is due to seasonality. But most of the time, or I'd say 100% of the time, you'll find that traders say, I'm going to get out at 100 pips. Well, I guess I won't say 100% of the time. Let's break down how people manage their trades. So a lot of people say, if it hits 100 pips, I'm taking profit. The problem with that is the rest of the market doesn't know what your 100 pip profit is. You're getting out psychologically because you hit triple digits and you're like, oh my God, I made a penny. And you're so excited, right? Well, that shows a level of impotency in the knowledge. Like you're getting out because of your psyche, but no actual logic. Not because it's resistance, not because it's average daily range or something, or not because you're just like, it's meaningful to you, but nobody else in the market. So like, it's got to be the dumbest thing. And it's usually out of fear. Like you're just so happy you made 100 pips because usually you lose. So you're like, oh my God, this will pay for 3 losing trades, right? Great. Whatever. Okay. That's how a lot of people do it. Then the next level is you get out at short-term resistance. Okay. Right. That's the second way, right? If that hits M4, you're out. And that's technical, which is good. That's good. Most of the time that is the right thing. Now, the next stage is to say, when do you override the current resistance, and when do you think days, weeks, or months in advance? Okay, so the next level, and like I would guess, like combined, this is 99% of the market. The other 1% is a time-based exit. Because you can anticipate when the market rotates based on a cycle, not a pattern. Okay? So I could say long Bitcoin, okay? Long Bitcoin, I'll just make up a number here, till June 15th. Just making up a number. Well, what will the price be? I have no idea. I have no idea. That's what the market has to decide. But you're thinking somewhere in here you want to go long, and now you jam your stop, and you don't even look at Bitcoin again until maybe June, early June, June 1st. And you're like, oh, I wonder where we are in Bitcoin. Oh, I bought it at 35 and now it's 72. Oh, yeah. Okay. And then you start using technical analysis again, and maybe 6 or 7 days later, it turns out, let's say on June 10th, you see a lower low and you're like, okay, that's good enough. And you're just like, you're out. At what price? Who cares what price? Who cares? That's not for you to decide. The market decides that. So you're like, oh, it's time. Oh, got a pattern to confirm it. Okay, I'm out, done. And now you go on vacation. Okay? But most people don't do that because they're not there yet. Okay? Now, a commercial bank probably behaves that way. No, I don't bot trade. No. Nope. Okay. So we did this yesterday in the day trading group. And we went back to 2003 and looked at oil market. And I told a story where I remember the exact spot we were here when we hit that. I was tying my shoes in the penthouse of the Marriott Marquis in Times Square and was preparing to go on stage in front of hundreds of people. That's why I remember. And the news was on in the background, and we just hit that. Brent hit $150 a barrel, and I was right there. Sweet. So I've been here before. This ain't my first rodeo. Okay, I was here and here and here and here. Okay, cool. So I discussed what was likely to happen next. You want to know that information? Why don't you join the group? No, but see, Richard, the idea that you're saying even though, that's where it doesn't make sense. That's where you're missing the point. So you're saying even though blah 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 blah. No, you need to remove that. Because of, for example. Cool. Okay. Now everyone in the day trading group, huh? All I have to say is elevator. Holy smokes, eh? So we can probably safely mark that, and we can probably safely mark this. And maybe look at it on a bigger point of view and see how it plays out later. Okay. Huh? Elevator. Elevator, elevator. And that's the thing though, right? Like I went over it, what, 3 times to make sure that it's remembered? Whether we made money or not, Richard, is besides the point. People will now remember elevator probably the rest of their life. And they know what it means. And they'll be able to repeat that. So even if they made no money, because it's not a signal service. So the idea is now they know forever. And it's another gem. It's another pearl that they can string together and have it be useful knowledge for a lifetime. Year after year after year. And, it doesn't happen that often. But like I said, doesn't happen that often, but I've been here before and I recognize it and I can anticipate what may or may not happen, but be ready, willing, and open-minded. Okay. So anyways. Okay. So, right. And you have to realize, when did we meet? We met when we were right here. Okay. Let's just say up is not what we talked about. Interesting anyways. Whatever. So where else can we go? We have gold trapped, as you can see. Okay, so think of it from a bearish point of view. Bears sell here and here. Okay. Conversely, bulls buy here and here. I think it's helpful to know that. So it's mostly like how to organize your thought process in your trading. I think it's helpful. What's up, Sav? Savage is in the house, y'all. It looks like there's a lot of sellers in there. Maybe. I look at that as profit taking first. Okay. Okay. And I want you to think about this, Richard. Yes, thank you, Thiago. Yeah, 4 p.m. is our swing trading group where we plan all of next week today. Okay. So I want you to think about it this, Richard, like this way, Richard. Okay, this is still a higher high. Now you might say this, okay, well then you call it a double top, but whatever. Let's just go with this. Let's just say that's a higher high and that's a glitch in the matrix because of news. Okay, great. So we got a higher high. Bears sell lower highs. So that wouldn't be bearish. Now, price would come down, but that does not make it bearish. That means bulls are taking profit. Bulls buy higher lows. So the only way that this is going to happen then is bulls profit at the higher high. In particular, like a retest or support or resistance here, that kind of thing. So my argument, like, of course, I don't know, but what I'm saying is this is more likely profit taking. Okay. This would be a double top, which could be a selling opportunity for a bear, but this is definitely, okay. This is definitely bears. Definitely. This is probably, but I would say this is bulls. This is bulls. And we talked about this once again, let me drop it, in the day trading group, or it might have been the swing trading group recently, where we talked about bullish selling. Okay? Or bearish buying. And you're like, well, that doesn't make sense. Bears don't buy and bulls don't sell. That's not true at all. I want you to think about that. So think about the bulls that bought here. Okay? Okay? These were sell orders. But they were, okay, these are buyers. So who are the sellers up here? Bears or bulls? Okay. So if you're a bear, the reason I would caution you here is, what is a bull going to do? If bulls just made a ton of money, what are they going to do? So you got to be careful because a bull's going to buy it here, right? Isn't that what a bull's going to do? They're exiting here. Wouldn't they re-enter here? Well, you got to understand that then before you start selling it here, because you're just going to sell it right into a bull. And then they're going to crush you because there's probably more of them. Okay. Now, if you walk away from it because it's just more bulls exiting, and then it does this, and then it rolls over, where are the bulls? Too many of them got out, and some other bears are trying to get in. Now you're going for the lower, because a double top is not bullish, it's bearish. So you need the bears in the game, and you're way better off selling when the bears are in the game, but not selling when the bulls are controlling the market. Both the bottom and the top of the market are bulls. So why the heck would you sell it? Jay Criminy. You gotta be in it when the bears are in it. And I would say this one is iffy and this is faux show. So this would be a question mark. This would be exclamation point. But both are legit. But this, a little bit of a guess. Of course it makes sense. I love it. Yeah, it's I love that scene when King Arthur is been given a task in a time of darkness by God. And King Arthur looks at God and says, "That's a good idea." And God says, "Of course it's a good idea." Arthur, King of the Britons. Of course. Yeah, it was God's idea. Of course it was a good idea, right? It's just funny. All right. So, you going to show some love for Wayne today? You're going to click the thumbs up button? I mean, dude, that is like, I bet you 80% of the market doesn't understand that. What I just said, as simple as it is. It's crazy. How come YouTube doesn't promote this? It's crazy. I wish there was 1,000 people watching right now. Oh, well, Wayne, you have to put the trade in the market. All right, well, whatever. Whatever. Thank you, Sav. All right, I got 7 likes and 9 people left. I asked for a thumbs up and they're like, screw this guy. All right. Well. Oh. What price did you get, El Moro? Huh, Picasso? Yeah, did you get it for under $1? I just want to live while I am alive. I wonder if I can pick it up. Wow, 60 cents now, brother. Yeah, well, the stock market's open. Yeah, I guess I'm going to go. I'm going to see if I can maybe buy this. Huh? Hey, put in $1,000 and you get the whole bank for $1,000. Yeah. All right, cool. So I'm going to go. I got work to do. And then this afternoon we got the swing trading group. Dude, come over to FX Bootcamp. Join us. We're a cool group, man. We're above average good looking. Yeah. Yeah, you should see us, man. We have our cameras on and everything. We're above average for sure. Yeah, even Irving. Yeah. So, peace on earth. May the pips be with you. May your profits be above average. I'll see you soon. Thank you for being in my life. You're good people.